I will also record, sir.
Okay,
Can you please allow?
okay. Now there are some power issues and it is about to raise.
Yes, sir.
Yeah, it's better. Now, Natasha, means, did you get any feedback from our student regarding the lessons? So lessons to be completed.
Not really, sir.
Okay.
I can ask again, sir.
Okay. Mm, we have some students also doing today. And also, Natasha, means I heard that the feedback on lessons, the course, it has to be completed by the students. That is open right now. Do you have any idea about that?
Sir. Sir, I will check on it.
Feedback reports of the faculty.
Faculty one, sir. Okay.
Okay. Then we'll start the session. Sometimes this is also would join with us, but anyway, we'll continue the session. Today, our plan is to discuss the taxation of partnerships. Taxation of partnerships. The basic background of the partnership, how the accounts are prepared, and things like that. All these are familiar to you all, since you all have done this topic, the accounting part in detail. For your advanced examination, here our intention is to identify how the tax computation is performed for a partnership. Start. And also, Natasha, we have shared all the documents, 3 documents, isn't it?
We have shared, sir. Yeah, uploaded to LMS.
Okay. Now, before working out the tax computation of a partnership, or maybe of an individual or of a company, limited liability company, we want to discuss one other topic, that is the qualifying payments. Qualifying payments. Qualifying payments. Qualifying payments. Let's see. I have the document. Is the screen visible?
Yes, sir.
Okay. Now today we'll be discussing about the partnership, but these qualifying payments are common for individual, all the persons. Who are the persons? The individuals, entities, and some other maybe some other things. Like there are certain other things, other entities. Basically, there are individuals, entities, and some other persons identified in the Inter Act. Some other persons. Individuals, they are like you and me. Thereafter, there is business entities, not the term business, the entities are there. For these entities, what is covered in the Act is limited liability companies, partnerships, limited liability companies, partnerships, and trust. And trust. And we know, other than that, we have individuals and entities. Within the entities, we have partnerships, limited liability companies, and trust. Other than that, there are some other entities also. There are NGOs. There are executors, NGOs, executors, maybe the government or any other persons identified in that, maybe charitable institution. For all these individuals and entities and any other persons identified in the Inland Revenue Act, these qualifying payments are applicable. Qualifying payments are applicable. Something like this. Something like this. Say, so we have sources of income. Sources of income. Under that we have, let's say, employment income. Employment income. Thereafter, we have business income. We have investment income and other sources of income. Other sources. Thereafter, we get this total, these figures. We have totals. So this total is called assessable income. Accessible. From this accessible income, I could remember, you also should be able to remember right now. Since the beginning, we have been telling how to identify the tax liability of an individual, of a company, the basics. From this accessible income, we can deduct certain things. We can deduct. If this is our accessible income, we can deduct certain things. We can deduct. Say, let's say this is an individual. If this is an individual, if this is an individual, this particular tax computation should necessarily be an individual. Why is that? Why is that? This should be the individual, the tax computation of an individual. Why is that? Can somebody say? Our students, why?
Because this has employment income?
Yes, very correct. This has employment income. Therefore, only individuals could have employment. Only an individual could have employment. If this is, thank you very much for the feedback. Thereafter, say from this we can identify, we can deduct 1.2 million. What is this? Say, what is this 1.2 million? Per 1 month, 100,000 into 12, 1.2 million. This is the relief. Thereafter, we can deduct qualified payments. Qualified payments. Qualifying payments. See, the qualifying payment, it has not been defined in the act. Instead of defining the qualifying payments, the Inland Revenue Act lists down certain payments. List down certain payments as qualifying payments. As a result of this payment, an individual or company would get a tax benefit. An individual or a business entity or any other person identified in the Inland Revenue Act would get some tax benefit. Let's say our assessable income is something like 8 million. If that is the case, we can deduct this relief. This is for an individual. Let's say this particular individual has donated some money to the government. Let's say 2 million. Due to some reason, he has donated to the school, to a government school. Therefore, these two can be deducted. This is a qualifying payment. So after that, we will be getting the taxable income. Taxable income. Now, here I have listed or pointed out only one qualifying payment like that. There are few other qualifying payments applicable to individual and for entities and other persons identified in the Inland Revenue Act. There are the simple things. So we identify what are the things available in the Inland Revenue Act as qualifying payments. That is what we are going to do now before identifying the tax liability of an individual, of a partnership, or of a company, maybe a trust, or maybe any other persons. So these are the qualifying payments. The summary version of qualifying payment. This particular material, it has been discussed with Madam Naina Anjali, the resource persons who take our advanced taxation course in the final year. She also assists us in order to resolve some tax issues since they are practicing while we are not practicing. So this is the summary. So what is the application of qualifying payment? So we can't define what qualifying payment is. The list of payments we can identify. So what is that? It is deduction from assessable income. It is deduction from assessable income before arriving at to taxable income. So what are the qualifying payments available? There are mainly three now. Now, in the sense from this year onwards, what are the existing qualifying payments? There are donations. There could be donations. And also there are expenses incurred on film industry. Expenses incurred on film industry. Some producers of films. Expenses incurred on acquisition, merge of banks by financial institutions. So there are three types basically. There are other types also, like you might have heard sometimes. If we invest in solar panel in order to generate electricity, we can claim that as a qualifying payments, but we are not going to discuss that in detail in this class. Not only that, we will also not be discussing is the second and third one, expenses incurred on film industry. It is there in the material, and expenses incurred on acquisition, merge of banks by financial institutions. These two will be discussed in detail when you take the advanced taxation course in the degree program. The application of qualifying payment. There we will discuss about the application of qualifying payment. Application. Say donations. These donations. Now we'll discuss donations. These are available in the section 52 and in the 5th schedule of the England Revenue Act. Say these qualifying payments can be enjoyed, or it's allowed to take as a tax benefit for an individual and entities. Individual like you and me, and the entities. And the individuals and entities. There are three entities we told. Limited liability companies, partnerships, and trust. So in arriving at the assessable income of an individual or an entity for a year of assessment under section 3, the aggregate qualifying payment referred to in para 1 of the 5th schedule shall be deducted. So what are those? The 5th schedule. The qualifying payments referred to in section 52 shall be as follows. The first thing, a donation made by an individual or an entity in money. It has to be in money, not in commodity or otherwise, to an approved charitable institution. Let's say you are an individual, you donate some money to an approved charitable institution. It has to be necessarily in money. So remember, it has to be in money. So charitable institution established for the provision of institutional care for the sick and needy. It has to be institutional care, not individual care. Institutional care for the sick and needy, declared by the minister as an approved charitable institution for the purpose of this subparagraph. There are two types of charitable institutions. Institutions established to provide institutional care for the sick and needy. The other one is the minister would declare these associations are to be treated as approved charity. For the examination purpose, we will say you, if we name a particular organization, we will say you, we will let you know whether this is an approved charity or not. So your life would be quite easy. So this is donation to an approved charity in money. In money, this has to be kept in. Say, for example, say there will be an approved charity. You have not donated something in money. You have donated some. Let's say there is an institutional approved charity that provides institutional care for the sick and needy. You donate some beds, or you donate some medicines. You donate some other needy items, but that cannot be treated as a qualifying payment. It has to be in money. So these qualifying payments, they have some limitations. For an individual like you and me, say it has to be 1/3 of the assessable income. 1/3 of the assessable income of the individual or 75,000, whichever is less. In the case of an entity, 1/5 of the assessable income of the entity or rupees 500,000, whichever is less. So, say if there are qualifying payments, let's say the actual expense is, this is an individual. Actual donation in money is rupees, let's say 200,000 by this individual. So how much can be deducted? How much can be deducted for this individual as the qualifying payment? So donation to an approved charity in money, we can say the name also. The name should be given when we submit the returns. All the details, receipt should be provided. So without a receipt, you can't claim any of the qualifying payment. My question is, actual donation made in money for an approved charity by an individual, Mr. Pereira, is 200,000. How much can be deducted? Can somebody provide the answer? Come on. We have some
75,000.
participants over. How much?
75,000.
75,000. 75,000. That is good. Very good. 75,000 would be deducted because of that limitation. Okay, that is one option. 75,000 would be deducted. Now, let's say some other person, he has made a donation in money, let's say rupees 60,000. This particular case. How much can be deducted? 60,000.
60,000.
This is in cash. 60,000, yes. Thank you, Lakshita. Actual donation in money. How much can be deducted? That is not 75,000, still 60,000. This is the case. Is this clear to you? This has to be in money to an approved charity. For an individual, this is 1/3 of the assessable income or 75,000, whichever is lower. Say, even if you identify 1/3 of the assessable income, this is a huge amount. The limitation is 75,000. We know the actual amount. Okay, if this had been an entity, say, let's say limited liability company, the limitation is not 75,000, but 500,000. 500,000 limitation. Okay, this is what we have been explained. See, donation made by an individual or entity in money to an approved charitable institution is, say, the limitation we have been discussing about it. In the case of an individual, 1/3 of the assessable income of the individual was 75,000. In case of an entity, say, partnership, limited liability company, and a trust, 1/5 of the assessable income of the entity of rupees 500,000, whichever is less. Next one, there again one other donation. This is donation in money to an approved charity. The other one is donation made by an individual or entity in money or otherwise. In money or otherwise. Could be money or other than money in any other way. So the following, the government of Sri Lanka, local authority, there is a list. Say any higher education institution, the Buddhist and Pali University, a fund established by the government, a fund established by local authority, the Seven Fund, a fund established by Provincial Council, Upper Union Fund, National Kidney Fund. Now, this list is available in the Environment Act, and we will not ask you to memorize this list. Say it's something like this. Say simply for your understanding purposes, it may be something donated to the government. For example, somebody donates some money or some other furniture or something to a University of Sri Lanka. It's a government like the fund established by the government. Like somebody donated some cash or furniture to a government school, let's say government school. So it is also treated as donation made to the government. That is the case. If someone is donating some cash or some bits to a hospital, national hospital, so that is government. All right. Say all donations made in base shall be claimed up to accessible income. Unlike the very first donations, what is the very first donation? Donations made to an approved charity. There is a limit. What is the limit? For an individual, that is 75,000. For the other entity, 500,000. But for the second type of donations made to the government or the government related, very associated like government institutions or the funds established by the government, there is no limit. What is the limit? Shall be claimed up to accessible income or actual donation, whichever is lower. But if something is remaining, that cannot be carried forward to the next year of assessment. Something like this. So let's say this is not an individual, but this is a company. This is a company. No employment income. So business income, investment income, and other income. This relief is not available. This could be, say, if available for qualifying payment made to an approved charity. Let's say this is approved charity. Approved charity. This could be, the upper limit could be 500. The other qualifying payment that we were discussing, let's say donations to government, donation to government, So how much could be, let's say a massive amount has been donated due to some reason by a company. There could be a genuine reason, no, some political reason. Let's say donation is, say, something like 10 million. So this particular company can claim all these donations. Donations made to the government or government established fund or an institution related to the government. This is the second type of donation, donation to the government. There is no upper limit, but still there is an upper limit. What is the upper limit? 8 million minus 500, that is 7.5 million. So they can claim only 7.5. The balance amount. What will happen to the balance? Balance between these two. 2.5 million. What will happen to that? What will happen to this balance? It cannot be carried forward. Cannot be carried forward. Can claim up to the total amount that could be claimable. This is the amount that could be claimable. But the rest cannot be carried forward. This is common for individual as well as other entities. So this is the all donations made to be shall be claimed up to assessable income or actual donation whichever is lower cannot be carried forward. So this is a summary. This is a summary. Say first one, qualifying payment, limit for an entity, limit for individuals, limit for entities, limit for. This is a summary what I have been discussing. Charitable institutions established for the provision of institutional care for the sick and needy. For an individual, 1/3 of the assessable income of 75,000, whichever is lower. For an entity, 1/5 of the assessable income of 500,000. Next one, yes, this is and declared by the minister as approved charity. Again, the approved charity. There are two types of approved charity. One is institutions established for providing care for the sick and needy. The other one is the institution declared by the minister as approved charity. Okay. Same rule. Actual donation, whichever is low, same. Say for an individual, that is same. The other one is donations to government or any fund established by the government. For an individual, no limit. Up to assessable income or actual donation, whichever is lower. For limit, the limit for the entity, up to assessable income or actual donation, whichever is lower. Thereafter, you will find an illustration, say example, I think example. So same thing. So you can leisurely read it and understand. The other one is qualifying payments for film industries. Say for the knowledge, for the sake of knowledge, you can keep on reading. This is not difficult. And there is an illustration also. There is an illustration. You can read it and understand. So for the examination purposes, we would like to let you know, we'll be checking only the upper part. That is the donations to approved charity, donations to the government or government related institutions or the funds established by the government. So anything to ask, so just give me a feedback whether you are comfortable. Anything to ask? Or can I proceed? You want some more time to think whether this is okay or not? I can give you a couple of minutes also if you want. Say take about 30 seconds and let me know. Okay. Thank you very much for the feedback. Someone says that is clear. Okay. Others? The exam will be written by you all on an individual basis. Therefore, whether this is understood or not, on individual basis is important, but important. And also, if you have question, that question could be very related to the lesson. So if that is the case, also I could explain. Anything to ask? What you'll have to keep in mind is certain things is, say, approved charities, say, approved charity, donations made to an approved charity by an individual or an entity in money. So in money, this is very, very important. This has to be in money. In money. The second one, in money or otherwise. In money or otherwise. In money, you know that is cash, notes and currency, otherwise, whatever the way. But in order to get the claim, the benefit, the individuals as well as the entities, they'll have to provide the evidence, the receipts or the letters issued by particular charitable institutions. Now, have you said that? Now, what is left over is today I discuss certain things in relation to partnership taxation. Thereafter, on some other day, we will be taking tax computation of an individual, and one other day, tax computation of a company. And we will conduct Zoom classes. In the next week also, we can conduct a class. Thereafter, you might know, you will be getting 2 weeks of study leave, depending on this trade union action. But even within the study leave period, we will be taking one other class because of this Friday, you know, so many Fridays for all you. Therefore, we have to take one other day during the study leave also without disturbing you. We can easily put the recording, but we think this Zoom class would be beneficial to you all when compared with the recording. Okay. Now, let me close this particular file. And we'll go to a presentation, that is taxation partnership. Now, today we want to complete this. This is not a very difficult topic since you all know the accounting aspects of taxation. So this is our lecture outline. So we discuss about some interpretations. What are the business entities? What is the partnerships and things like that. Taxable income of partnership, how to work out the taxable income of partnership. Thereafter, we'll move to computation of taxable income of partnership. And there are qualifying payments. Qualifying payments, when it comes to qualifying payments, I discuss that those are available for individuals and business entities. Partnership is one entity identified in that. There are payment of tax. So we'll discuss. This payment of tax also, if you could remember, Kohila sir took a class for tax administration. Many of the things were discussed. All these things are common for partnerships or for a company. So we'll take the next one. It is taxation of a partnership. This is covered in the section 195 of the Act defines the partnership as means an association of 2 or more individuals or corporations carrying on business jointly for the purpose of making profit, irrespective of whether the association is recorded in writing or not. The meaning is the agreement could be, the partnership agreement could be in writing or maybe in otherwise, maybe by way of understanding in law of contract. So what you should understand here, one other thing, say there could be partners, Mr. A and Mr. B are partners. Sometimes Mr. A and XYZ company would create a partnership. That is also available. Partnership. An individual and some other entity, they get together and form a partnership. So it means an association of two or more individuals or corporations carrying on business jointly for the purpose of making profit. So that is what you should understand. Either maybe individual as corporations or corporations. Two corporations get together and form a partnership. So this is the definition that I told you. Persons. This is persons. Persons means an individual. We have been discussing an individual or an entity. Or an entity. This entity includes a body of persons. Body of persons, corporate to unincorporated, and etc. Non-government organization, charitable institution. So we have these two major. An individual entity, and as I told you when I was discussing about qualifying, I told you there are other things, body of persons, corporate to incorporate, and etc. Non-government organization and charitable institution. The entity has been discussed separately. Entity, what is there in the entity? A company, limited liability company, partnership or trust. Entity. But exclude an individual. Say within the entity we have three: limited liability company, partnership or trust. An individual is not an entity as per that. So this is the partnership definition. Say associate two or more individuals or corporations carrying on jointly for the purpose of making profit, irrespective of whether the association is reported. Right. So we'll come to the next one. The summary. This is the same thing summarized. Person is an individual or an entity. Entity has three elements: company, partnership, or trust. All these persons, all these are persons. Thereafter, body of persons of corporate or unincorporated, and etc. A non-government organization, a charitable institution. When I was discussing about the qualifying payment, I told in that it says certain qualifying, many of the qualifying payments are common for individual or an entity. Say, how about non-government organization? Some of the qualifying, for example, some of the payments, for example, say donations made in money to an approved charity, it is available only for an individual or entity. Individual or entity. Not for this. Say, if that says any persons, all the persons will cover. In those sections that we discussed about the qualifying payment, the donation says that is for an individual or an entity. So for example, say there is a non-government organization, they donate some cash to an approved charity that provide institutional care for the sick and needy, but that NGO, they can't claim that as qualifying payment. That is the case. So we'll go to the next one. A partnership is included in the definition of entity, and given that an entity is for tax purposes treated as a person, a partnership is also deemed a taxable person in that. And also, when the number of partners is more than 20, then the partnership will not be considered as a partnership, that is treated as a company. That is also quite important, but we will not be testing these things for the taxation examination. Next one, taxable income of a partnership. Taxable income of a partnership. Say, just to recollect what we have been discussing throughout the sessions, we identify different sources of income: employment income, investment income, business income. Say, we identify under business income, we identify certain expenses. Say general deductions, specific deductions, and also we take certain other items separately, and we apply the learning to particular sections. We identify how to identify the tax adjusted business income. All these rules will be applicable for partnership as well. For example, say capital allowances we discussed. We discussed capital allowances. How to provide capital allowances. Let's say an individual is doing a business. A partnership is doing a business. A limited liability company is doing a business. For all these different persons, the way of working on the capital allowances are quite same. No any difference. No any difference. If there are entertainment expenses incurred by these particular person, 3 persons, I have been telling you, those are disallowable. Domestic nature expenses, those are disallowable, like that. All the stuff that we studied when we identify the business income as a source of income, all the things that we discussed are common or applicable for a partnership also. Not only for partnership, but individuals and the company. So, other than that, due to the nature of the partnership, there are other specific things that we would like to. Those things will be discussed from this point of specific things of a partnership. Okay. Those are also not that difficult since you have the basic knowledge of the partnership. Okay. Determine the income, gain, or profit of the partnership. Okay. Amounts derived and expenditure incurred in common by partners should be treated as amount derived or expenditure incurred by the partnership and not by the individual partners. For example, say the rent of the partnership is paid by a particular partner, Mr. A. That is paid on behalf of the partnership. That rent has to be treated as an expense of the partnership, not a personal expense of Mr. A or the individual partner. This is common for income also. Let's say there is a partnership, 2 partners, A and B, they provide consultancy services. Mr. A provided consultancy services to client of a partnership. Therefore, that is an income of the partnership. All the business activities of a partnership shall be treated as conducted in the course of a single partnership business. Single partnership. There's a partnership. There are so many business activities. Whatever the business activities that were conducted are the activities of the partnership business. And one other special things like arrangements between partnership and its partners should be recognized and following should be taken into account in determining the partner's share. It's sort of, the profit appropriation sections, profit appropriations. Labh visarjana karni. Say loans made by a partner to a partnership and interest paid in that respect. Say if a partner has provided a loan, that partner would take interest from the partnership. That is one thing. The other one is services provided by a partner to a partnership, including by way of employee. Let's say Mr. A serves the partnership as an accountant. So services provided by partner to partnership in the capacity of an accountant. Or any service fee or income from employment payable in that respect. Say Mr. A served as the accountant, he is paid the salary. So this has to be recognized and accounted separately. So we will be discussing this in detail. Next one, computation of taxable income of a partnerships. No deductions are allowed for partner salaries, interest on capital or any other benefits Say it's something like this. Let's say there's a partnership. They have a let's say net profit of 10 million. These partners could say, okay, we paid salaries to ourselves, 5 million each. So no taxable income. So that could happen. Therefore, these deductions, no deductions are allowed. The salaries cannot be treated as an expenditure of the partners. Similarly, interest on capital or any other benefits. Basically, salaries, interest on capital, any other benefits in the sense a particular partner provided a service to the partnership and got some money from the partnership, that is a benefit, but that cannot be deducted as an expense of the partnership. Partner's share should be equal to the partner's percentage interest in income of the partnership as set out in the partnership arrangement. That is simply partner share should be the profit sharing ratio. A loss incurred by the partnership. A loss incurred by a partnership instead of a profit. If there is a loss incurred by partnership, it shall be treated as partnership's loss from its business or investment for that year. If there is any loss from the realization of investment asset, such loss should not be set off against any profits on the disposal of another investment asset. For a partnership also, there could be business income and investment income. From the investment income, if there is a loss, such loss cannot be set off against the business. When the partnership incurs loss, such loss will be allocated to the partners in their profit sharing ratio. You know this, how to allocate loss. So having said that, we'll go to the next one, qualifying payments. This is qualifying payments. So I have been discussing this qualifying payment. This is applicable for partnerships. I just go through this. Donations made by an entity. This entity partnership is also in money. So I discussed a charitable institution provides say in money to a charitable institution for the provision of institutionalized care for the sick and needy. The other one is declared by the minister as an approved charity, subject to maximum of, say, for a partnership for business entity, 500,000. Unclaimed amount, if any, cannot be carried forward. These are the qualifying payments. Next one. The list I gave you, donations made in money or otherwise to the government, and the certain prescribed institution is claimable at 100%, but unclaimed amount, if any, cannot be carried forward. Local authority, higher education institution, these separate funds that I was discussing. So since I discussed this in detail, so I'm not going to discuss this again. Next one. Payment of income tax by partnerships. Payment of income tax by partnerships. Payment of income tax by partnerships. With effect from 1st January 2020, the following rates are applicable. So taxable income for year of assessment, for the first 1 million, that is 0, rate is 0. Any amount that exceeds rupees 1 million, the tax rate applicable is 6%. 6%. So there are basically two tax rates. Up to the first 1 million, 0. The amount that exceeds the first 1 million, the flat rate is 6%. Other than that, if a partnership taxable income includes gain from the realization of an investment asset, such gain is liable to pay tax at the rate of 10%. This was discussed by Sirsa on the last day also. 10%. Partnership shall allocate the share of partnership tax to the partners. This tax paid, the tax liability will be allocated to the partners. We'll be explaining this in detail while we are discussing some today. Subject to the payment of partnership income tax, partners are entitled to deduct share of partnership tax as a credit. For example, let's say the total tax payable by, let's say there are two partners called A and B. Their profit sharing ratio is 1:1. Let's also assume the tax liability is 200,000. 200,000 tax liability. This tax payable is 200,000. So each partner, Mr. A could take this 200,000 divided by 2. That is their profit sharing is 1:1. So let's assume there are no other transactions. Mr. A can take 100,000 as a tax credit. Say partnership shall allocate the share of partnership tax to the partner. Subject to the payment of partnership income tax, partners are entitled to deduct share of partnership tax as a credit. If the answer for this particular computation exceeding 1 million, let's say 200,000, and also for understanding purposes, let's say there are no other issues. So one partner will get 100,000 as a tax credit. The other partner is also get 100,000 as a tax credit when they submit their individual income tax computation or when they furnish the returns. However, any excess share of partnership tax is not entitled to refund, but allowed to be carried forward by the individual. Partners are entitled to deduct such excess amount against the future installment payable. Let's say the example that I took a little while ago, Mr. A and B, they are sharing, carrying out a partnership. The partnership total tax payable is 200,000. Mr. A got 100,000 as the tax credit. But say when Mr. A work out his individual income tax computation, let's say there is a tax refund because of this credit. This refund cannot be claimed by Mr. A by way of cash from the Inland Department, but he can carry it forward to the next accounting, next year of assessment. So payment of income tax. These are say quite similar. A person who is an installment payer. Liable to pay income tax required to compute the income tax liability for year of assessment. The income tax is to be paid for 4 quarterly installments. So these were discussed. Non-payment of the income tax is that penalties as per section 76. This one also discussed. The statement of estimated income tax payable for the very first quarter, that is January, February, and March, not January, very first quarter of the first year, year of assessment, let's say 2024-5, April, May, June, thereafter July and August. August 15, the statement of estimated income tax payable should be filed. This is not common for a partnership. This is for person. Each person, individual, company, all the. Next one, different days of the payment. This is also quite common. This is also quite common in the sense for the first quarter, 15th August, thereafter 15th November, 15th February, say last quarter, that is January, February, and March. Thereafter, we have 1.5 months, April and May 15. This is date. If any person has obtained approved to apply different year of assessment under section 20, quarterly payment should be made before 15th day following the end of each quarter. Oh, that is the case. Now, just tell me. So thereafter the next step is I will take a tax computation. tax computation. We'll do the tax computation of a partnership. Before proceeding to that, just let me know whether you have any issues. Anything to ask? We will be getting the number of participants less and less. Before in the sessions, there should be at least myself, Natasha, Miss and Miss results. So we'll go to the illustration. Simple one, okay. Very, very difficult one. I get that file. See, this is the sum I gave. See, I give you about say 2 minutes to read the entire sum. 2 minutes. So you keep on reading. You have this. Janak and Manju Associates is a partnership that provides entertainment. 2 minutes. Now it's 7:15. I start the computation on 17. Now in my computer that is 7:16. From 7:18 I will start the computation. I will give these 2 minutes to read the sum. Read the sum. Okay, I have given an extra time also. This is Janak and Manju Associates, the partnership that provides entertainment services. They share profits and losses in the ratio of 1:1 respectively. Thereafter, the summarized income statement of the partnership for the year ended 31st March 2024 is given below. Gross profit, interest income on FD, the gross amount, total 86,000, less operating expenses 50 million, net profit for 36 million. The following expenses have been deducted when arriving at the above net profit. Janak and Manju obtain a monthly salary of 300,000 each. Monthly salary of 300,000 each. Each partner was paid an annual interest on capital of 200,000. Each partner was paid. Donation was made to an approved charity amounting to rupees 1 million. Next one. Janak has provided loan to the partnership and interest of 200,000 has been paid to Janak and has been accounted within operating expenses. Next one, a salary of 150,000 per year has been paid to Manju's wife. Janak and Manju are the partner, Manju's wife, for serving as the accountant of the partnership. Next one. Accounting depreciation charged to net profit is rupees 3.5 million and the relevant capital allowances amount to 2.5 million. Partnership has paid quarterly installments of partnership income tax 1.8 million. Assume that all other expenses are allowable for the purpose of taxation. We have three requirements. One is calculate the tax payable by the partnership. The second one, prepare a statement showing the allocation of divisible profit to the partnership. Third one, particularly tax computation of the individual partner. So before coming into this, we'll read this later. We'll try to work out the first one and the second one, A and B. Let me share an Excel sheet with you. This is the Excel sheet. This is the sum. This is the sum. The same sum that I was reading, I have taken this sheet, the Excel sheet for easy reference. This is the sum. All right. I suppose this will be quite easy for you all also. Thereafter, we try to do the sum. But in the first one, calculate the tax payable by the partnership. So this is Janak and the partnership. Calculation of tax payable for the year of assessment. Two 2023-20. All right. Let's see the case. Thereafter, we start from the net profit of the partnership. This is the net profit. Net profit is 36 million. So we'll have this. Say so we have a net profit of 36 million. So we'll write in this column at column 36 million. All these are in rupees. So thereafter, we identify this interest. It is there within this net profit 2 million. Therefore, we have to eliminate that interest. That is a separate source. Separate source. Thereafter, we have partner salary. Partner salary. Two partners, Janak and Manju. Say, what is the clause given? Janak and Manju obtain a monthly salary of 300,000 each. 300,000 each. So this is 300,000. Into 12. So can that be deducted? That cannot be deducted. It has been deducted. Therefore, we add back. For the other part also same. Thereafter, each partner was paid an annual interest on capital 200,000. That is 200,000 plus 200,000, altogether 400,000. 400. That cannot be deducted. That is a benefit received by the partners. Next one. A donation was made to an approved charity amounting to rupees 1 million. It's a donation. Can a donation be deducted? So not only for a partnership, but also for any other person, it cannot be deducted. Can be deducted. So we have to add back. Thereafter, Janaka has provided loan to the partnership. An interest of 200,000 has been paid to Janaka. And it has been accounted within the operating expenses. Now it is there as an expense. So we have to eliminate this. Loan interest Janaka. $200,000. Next one. The salary of 150,000 per year has been paid to Manju's wife for serving as the accountant of the partnership. That is 150,000 into 12. How much? My question is, can this be, should this be added back? Yes or no? Give me feedback, quick feedback. Is it allowable or not allowable? That is allowable. This is allowable under present IRB Act. Remember, allowable. Allowable expense. Allowable expense. So nothing will come. So you'll have to raise your question and get clarifications if required. Yes, there is a question. It's per month. It's Janaka has salary funded per year. Yes, per year. It need not be, say, first one, it need not be multiplied by 12. That is very correct. It is per year. That is correct. Thank you very much for the feedback. Some of you are there joining in the same company. That is also good. Per year, that is all right. Say one thing. I got your feedback. This 22689, 22565, and 22393. This is per year. Yes, correct. One other thing. I told you this is an allowable expense. Anything to ask with respect to this? This is allowable. That is allowable. So if any expenditure, say in this situation, somebody, some wife or husband or whoever the spouses would work in the partnership, they might be paid salary. Those are allowable expenses. Those are allowable expenses for partners, but you should have any other question. Any questions with respect to this one? Salary for Manju's wife. No questions. Only I have questions. I have questions, but without you raising the questions, I won't give the explanations. That is also not that reasonable. The point is, we have a class of maybe 300 around, only 30 people like join. So we appreciate your presence in the class. Say this is not this is allowable. This is an allowable expenditure for the partnership. The other thing is, when the income tax computation of Mr. Manju is done by Manju for his individual income tax computation, he has to take this 150,000 as his income of the partnership. Yes, I am getting some answers. Both answers are correct. She is not an employee of the partnership. She is only an employee of the partnership. That is good, very good. Say because she is not a partner of the firm, right? That is also good. See the one other thing. Let's say salary of Manju's wife. This is 150,000. Let's say the amount is 3 million, like 4 million. Then what will happen? 3 million, 4 million. A massive amount, but still, as per the act, it is an allowable expense. But when Manju's tax computation is done, Manju's tax computation is done, the salary paid to the wife has to be taken as an income of the partnership by Manju. That is as per the present. That's so it is there in the section number 52, 53, subsection 7. If you want, you can read these sections. It's there. Oh, next one is accounting depreciation. Accounting depreciation, I appreciate your presence as well as the feedback. Accounting depreciation, can that be, say, next one? Accounting depreciation charged to net profit is 3.5 million. It has to be reversed back. 3.5 million. Relevant capital allowances amount to 2.5 million. Capital allowances 2.5 million. Partnership has paid partly installment of partnership income tax 1.8 million. That is not an expense, so we'll get the summation here. Summation. The difference between these two. 43,800,000 is the business income of the partnership. excess income of the partnership. Thereafter, interest income. We have interest income of the one other source. This is 2 million. So we have to take that 2 million. This is summation is total assessable income. Total assessable income. Less qualifying payments. For this partnership, can they claim this 1.2 million available to an individual? No, that is not possible. But they have made a donation to an say we'll keep on the number. The donation was made to an approved charity amounting to rupees 100,000. It has to be necessarily in money. Say let's say donation was made to an approved charity in money. Let's say in money. It has to be in money, 1 million. So can we claim 1 million? We can't claim 1 million. We can claim only 500,000. We discuss about the qualifying payment. Now our taxable income is the difference between these 46,300,000. 46 million. Okay. $45,300,000 taxable. This is our taxable. Thereafter, tax payable for the first 1 million. For the first 1 million, what is the rate applicable? What is the rate applicable? That is 0. Can remember. 0. For the balance, that is 6%. 6%. For the balance, 6%. So this is 0 tax liability. How much is the balance? Balance is 45.3 million minus this 100, 1,000,000, 44,300,000. We get the value. $2,658,000. This is the tax liability. Any issue up to now? Anything you like to ask from me? This is the tax liability of the partnership. Say there is a tax credit, that is partnership has paid quarterly installment of partnership income tax 1.8 million. That is the tax credit 1.8 million. Balance tax payable. $858,000. This is the answer for part A. Calculate the tax payable by the partners. This is part A. Part B, anything to ask before proceeding?
Sir, epic payment is 1 million, no?
Is it 1 million? Partnership has paid quarterly installments of partnership income tax 1.8 million. Is it? Are you referring to some other information? No. Now, say, though you have been reading the C, I suppose. Is it? Don't read the C part. We are
Okay,
studying
sir.
A, thereafter will come to B. Okay. Information number 7, do just read all the participants. Partnership has paid quarterly installment of partnership income tax of 1.8 million. This is this bit pay. Yes. Okay. This is for part A. Anything to ask? Give me 1 minute. One of our participants, either son or is asking, why can't we add this 1.8 million when we add the when we identify this net profit? This one. This is the case. Say, forget about the partnerships. Think about the company, 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 profit before tax, profit after tax, thereafter, profit available to the other. There is one other section, I will come to that also. One section is $1.8 million. 1.8 million is the tax paid. The company එකක් හිතන්නකො company එක tax ගෙවන. tax ගෙවන එක වියදමක් විදිහට අඩු කරන්න දෙනවා. වියදමක් විදිහට අඩු කරන්න දෙනවා. අඩු කරන්න දෙන්නේ නැහැ. ඒ ගෙවන්න ඕනේ ආදායම් පත්‍රේ රජයට ගෙවන ගාන තමයි මේ 1.8. ඉතින් ඒකට කලින් තමයි හදාගන්නේ. මේ වගේම තමයි partnership එක ගෙවන්න ඕන tax එකෙන් 1.8 million ගෙවුවට පස්සේ ඒක වියදමක් කියලා අඩු කරුවොත් මොකද වෙන්නේ කියලා බලන්නකො. මෙතෙන්ට අපි මෙතෙන්ට දැම්මොත් එහෙම 1.8 මෙන්න මෙතෙන්ට අපි මම දැන් දානවා මේක ලියන්න එපා 1.8 billion කියලා දාපු ගමන් දැන් 42000ක් වෙනවා. 42000 කියන්නේ අර ගෙවන taxable income එක අඩු වෙනවා. business income එක අඩු වෙනවනේ මෙතෙන්ට අපි අඩු කරන පැත්තට. අපි දැන් අඩු කරලා තියෙන එක එකතු කරලා කියලා හිතමුකෝ. දැන් අමන්න දැන් දැනට අඩු කරලා මොකුත් නැහැනේ මේගොල්ලෝ. අඩු කරලා නැහැ 1.8 million වලට මොකද කරුවේ කියලා නැහැ. partnership has paid quarterly installments. ඒක අපි මෙතන adjust කරුවා ගමන් මෙතන වෙනස් වෙනවා. හැබැයි tax එකක් කියන්නේ profit එක arrive කරුවාට පස්සේ ගෙවන figure එකක්. ඒක අඩු කරන්න දෙන්නේ. තව ප්‍රශ්නයක් වල තිබ්බා. sorry ප්‍රශ්නයක් තිබ්බා. partner salary එක double calculate කරලා තියෙනවා කියලා. කොහොමද? මෙතන කියලා තියෙන්නේ the following expenses have been deducted when arriving at profit. Janak and Manju obtain a monthly salary of 300,000. See, when this profit is worked out, this salary has been deducted as an expenditure. Right now it has been deducted. Therefore, we add back. අපි මේ add back නේ කරුවේ salary. Add back. Salary එක අපි මේ net profit එක දීලා තියෙනකොට net profit එකෙන් අපි salary අඩු කරලා දීලා තියෙන ඉතින් ඒකට double count වෙන්නේ නැහැ. දැනට salary එක අඩු කරලා තියෙන ඉතින් ඒක එකතු කරනවා. දැන් මට කියන්න දැන් අපි මේ part A හරි ඊට පස්සේ අපි part B වලට යනවා. Prepare a statement showing the allocation of divisible profit to the part. මේක part B. Allocation of divisible profit. Allocation of divisible profit to the part. අන්න ඒක හදන්න මෙහෙම මේක හරි ලේසි. දැන් අපි අතරින් ගොඩක් දේවල් කරලා තියෙන්නේ. අපි ටෝටල් එකක් ගන්නවා. ජනක and මන්දු මෙතන තියෙනවා. ඊපස්සේ මේවා rupees. දැන් අපි දන්නවා say we know from this partnership they have taken some money. So they have taken salary of 3.6 million. This one also 3.6 million. Total is this much. $7.2. Interest on capital. Interest on capital, that is 200,000 each. Interest on capital, 200,000 each. Total is 400,000. Interest on loan. Interest on loan, it is available only to Janak. Can remember. Interest on loan. Interest on loan, Janak, this 200,000. Profit share. Profit share. The total one is their total taxable income, that is 45,300,000. This figure 45,300,000. $45,300,000. This one 45,300,000. Say how much is remaining after that. Say this is the total. Say we want to identify this profit share. So we'll identify the profit share from this figure. We deduct salaries, interest on capital, and interest on loan. We get 37,500,000. So their profit sharing ratio is equal. Therefore, we get 18,750,000 for each part. So we'll get the summation. This is the summation. This is the statement. The statement, the allocation of divisible profit to the partners. Now this partnership, they have a total tax liability of 2,658,000. So it has to be divided between these two partners using these ratios. This is the ratio, this ratio. Let's say if this is not equal, remember, why this is not equal? One partner gets some interest. This is not equal. So if this is 2, let's say this is 3, this is 2, this is total is 5. Now it's something like, total is 5. Therefore, you just divide this using this ratio. Instead of 5:3:2, you have some other ratios. Using that ratio, you just do the calculation. Something like this. Something like this. Say, let me write the formula. 2,658,000. Is that 2,658,000 divided by 45,300,000 multiplied by this share, 22,750,000. So Janaka would get 1 million. Check this calculation. 334,868. This is for Janaka. Manju. Same formula. You'll have to alter this one. 22,550,000. 22,550,000. This is Manju. So get 1,323,137. I have the answer with me. Get the total. 2,658,000. There is 5 rupees also. You can forget this 5 rupees. This is tax credits available to each partner. So this is the statement. Prepare statement showing the allocation reasonable profit to the partners, including the tax credit. Anything to ask? We are about to finish the session also. So there is one more thing that won't take much time. Part C. So any feedback? Is it clear up to now? Those who are there in the session?
Yes, sir, it is clear.
Now we'll proceed part C. See, now we read part C. Janaka is employed in a private company. After explaining this, the wife issue, the wife salary, I'll again explain. Somebody should remember before winding up the session. Janaka is employed in a private company as the finance manager. In addition to this partnership, he might be employed somewhere. His employment income for the year is 3.6 million. All tax adjustments are already made. Rapid payments for the employment income is rupees 1 million. Advance payment of income tax, something like paying. Compute the income tax liability of Janaka for the year of assessment 23-24. Thereafter, we go to this. This is part C. Part C. We know employment income, that is 3.6 million, I suppose. Employment income 3.6 million, rapid payment 1 million. 3.6 million. 3.6 million. Employment income. Partnership income, business income, that is how much? This is Janaka, therefore we know the figure is 22,750,000. Total assessable income is the summation of these two. Total assessable income. Was there a qualifying payment?
Yes.
Any qualifying payment? Was there qualifying payment, Janaka?
Yes.
Anything that can be deducted here? Come on.
Relief.
Hmm?
Relief.
Hello, I can't hear you.
Relief.
Yes,
1.2.
relief. Qualifying payments and relief. That is 1.2. Very good. This is for an individual. Therefore, this could be deducted. If there were qualifying payment, we would have taken that also into account. In this situation, no qualifying payment. Say the objective of working out this sum is not to work out the exact similars, but one thing I like to tell you, partnership income in this situation, this particular partner, his individual income tax computation, individual, he has employment income, partnership income. Let's say if we had rent income, what will happen? Rent income, it would come here. Rent income, investment income. If this is there from rent income, he has qualifying payment relief, and also that 25% relief can remember. It also would come 25%. Now here no rent income, therefore no 25%. So we will work out the taxable income. $25,150,000. Thereafter, we have to identify tax liability. This is the tax liability of the tax slabs, 500,000, 500,000, up to 30%. So we have to identify the balance also. This is 2.5 million. So we have to calculate the balance. Balance in the sense, this is the total tax liability. We have to do the balance. We are calculating the balancing figure, that is this figure minus 2.5 million. Apply this tax. Tax rates 6, 12, 18, 24, 30, 36 for the balance. Get the summation. This is the total tax liability. Total tax liability. Of this individual part. Thereafter, less tax credits, employment habit, that is 1 million. It was given, can remember. I suppose you can remember 1 million. One more zero is required. Thereafter, partnership. From the partnership, there was a tax credit. What is the tax credit? That is 1 million. This one. Can remember. From the partnership, this is the tax credit. See, the total tax liability of the partnership is 2,658,000. It is divided between these two partners using this divisible profit sharing ratio. So Janaka got 1,334,868. This is this. Thereafter, balance tax payable by this individual, that is Janaka, 6 million. Okay. From the total tax liability, we deduct employment habit, partnership tax credit. We get 6,200,000 and let's check this answer again. $6,269,000. Anything to ask? Now this is the way. Now let me explain one other thing. Let's say this is Janaka. If this had been Manju, why Manju? So can remember, if you can remember, this is Manju. A salary of 150,000 per year has been paid to Manju's wife for serving as the accountant of the partnership. If that is the case, the Manju is a partner, his wife is the spouse. If we are preparing the tax computation of Manju, not Janaka, this is Janaka, we would add that salary into this place. If that is the case, this is not relevant for this one, 2,750,000 plus 150,000. That is as per the section 53, subsection 7, right? So you can read the sections in the English if that is the case. Otherwise, what will happen? You can remember, say, let's say somebody could say, this is my wife, this is my husband, I pay salary for the services rendered. But if that is a very huge amount, it has to be captured. The way of capturing is this. When the individual partner is preparing the tax return, he has to submit that particular spouse's salary paid by the partnership as his share of business income from the partnership. Anything to ask? Anything to ask? Okay. What we will do in the next day, we will make a tax computation of an individual on some other day. Or perhaps in the same day, I don't think we have the sufficient time. We will, and also you will be getting a recording for withholding tax. During coming couple of days, you will be getting a recording for the withholding tax, short video for withholding tax. Thereafter, we will be computing. We will be doing a tax computation of an individual and of a company. Okay. So having said that, if you don't have any other question, yes, there is a question. Thank you. Balance tax payable of Janak. It's balance tax payable. Is this okay? Balance tax payable. Is it say just somebody's asking whether this figure is okay? Say just see whether I have made a mistake somewhere here. Say this should be 25,150,000. Okay. Thereafter this one 1, 2, 3, 4, 5, 2.5 billion. So okay. This rates. This is the balance. Let me sum up again. Any mistakes? Somebody observed any mistakes in the formulas? Balance tax payable by balance tax. Balance tax is from this figure we had deduct this figure and partnership tax. Yes, getting the same figure. Any issue? Just check the calculations. Okay, having said that, if you don't have any other questions, I'm going to wind up the session. Okay, thank you very much for the sons and daughters. Thank you very much, Natasha. And Jesus also would be there in the line. Thank you very much, Jesus, sir. So we'll have the next session on the next Friday live. Thank you very much for
Okay, sir. Thank you very much. Okay. Good
Thank
night.
you, sir. Good night.
Okay, good night.
Thank you, sir.
Okay.
Thank you.
So we'll wind up the session now. Thank you very much.